Ladies and gentlemen, good day and welcome to the TCS earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Nehal Shah from the Investor Relations team at TCS. Thank you, and over to you.
Thank you, operator. Good evening and welcome everyone. Thank you for joining us today to discuss TCS's financial results for the second quarter of fiscal year FY2026 that ended on September 30th, 2025. This call is being webcast through our website, and an archive, including the transcript, will be available on the site for the duration of this quarter. The financial statements, quarterly fact sheet, and press releases are also available on our website. Our leadership team is present on this call to discuss our results. We have with us today Mr. Q2FY26, Chief Executive Officer and Managing Director.
Hi everyone.
Ms. Aarti Subramanian, Executive Director, President and Chief Operating Officer.
Hi everyone.
Mr. Samir Sakseria, Chief Financial Officer.
Hello everyone.
And Mr. Sudeep Kunnumal, Chief Human Resources Officer.
Hello everyone.
Our management team will give a brief overview of the company's performance, followed by a Q&A session. As you are aware, we don't provide any specific revenue or earnings guidance, and anything said on this call which reflects our outlook for the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risks that the company faces. We have outlined these risks in the second slide of the quarterly fact sheet available on our website and emailed out to those who have subscribed to our mailing list. With that, I would like to turn the call over to Kriti.
Thank you, Nehal. Good day, everyone. Firstly, I would like to warmly welcome Sudeep Kunnumal, who has taken charge as our CHRO with effect from 1st October. Sudeep brings over 3 decades of experience encompassing a wide spectrum of areas within human resources, with leadership roles across multiple geographies, business groups, and HR sub-functions. Please join me in wishing Sudeep all the very best in his new role.
Thank you.
Moving on to Q2 performance, we have delivered a good performance in the backdrop of continued macro challenges. All verticals, except consumer business, and all geographies, except United Kingdom, returned to positive sequential growth this quarter. India and emerging markets continue to show strong growth momentum in Q2. In reported currency, our revenue grew 3.7% sequentially and 2.4% year-on-year. Our quarterly revenue grew 0.8% sequentially in constant currency. International revenue growth was at 0.6% quarter-on-quarter in constant currency. We also delivered strong operating margins and free cash flow. We continue to see robust sales momentum this quarter across industries and markets. We are pleased to report a TCV of $10 billion. BFSI TCV was at $3.2 billion, and Consumer Business Group contributed $1.8 billion. North America TCV was $4.3 billion. Our TCV had a sequential increase of 6.5% and a year-on-year growth of 16%. More importantly, this quarter, we announced a significant mega deal with Tryg Insurance, underscoring our continued success in securing large-scale, complex engagements and reinforcing our position as a trusted strategic partner for our clients. Our deal pipeline continues to show strong momentum with a healthy mix of cost optimization and transformation deals, as well as services and platform deals across new and existing businesses. Based on client conversations, Q2 revenue growth and TCV and the strong demand pipeline, we see FY26 international revenue growth to be better than last fiscal year. IT services spend is steady with no significant change expected in near term. Lingering uncertainties in the broader economic environment continue to remain a key challenge. Companies are keeping a tight control over their discretionary budgets. In response to economic and demand volatility, clients are consolidating vendors to achieve transformation objectives effectively and efficiently. We are finding good success in many such large deals using our differentiated AI-infused solutions. The mega deal with Trig Insurance is a good example of how we scale long-standing partnerships with our contextual knowledge, unmatched delivery track record, and leadership in AI. Now I want to move on to our message. In the last few quarters, we have undertaken many internal and external to accelerate the adoption of AI within TCS and our clients. We've been engaging with our clients and understanding the challenges they are facing in scaling AI and collaborating with technology partners and academia. It's given the confidence to say, a services company, enabling business, government, and society. This transformation is currently underway. Early this year, our leadership team with R.T. Subramaniam joining us as CSO. We also created the new role officer, services integration with Amit Kapoor. We are committed to making significant investments towards transforming ourselves in order to realize our vision. At this time, our investments are focused on these 5 pillars. TCS raised the power of AI, our internal transformation to drive an AI-first culture, build AI solutions, and scale AI for connected intelligence. Redefining all services in a human plus AI services model. We have established an AI and services transformation unit for this purpose. Third, building a future-ready talent model. We are investing in future-ready skills, embracing new ways of working, and recruiting top talent locally in the markets we operate. Fourth, making AI real for clients. We are redesigning business value chains for every industry. We are also investing in development of innovative cross-industry solutions, leveraging AI. And last, expanding our AI ecosystem play. We are deepening our partnership in the AI ecosystem, stepping up our efforts in M&A, and foray into new business ventures. You would have seen the press release earlier for List Engage and the new entity for AI infrastructure in India. I'll now invite Samir to share the update on our financial performance.
Thank you, Priti. In the second quarter of FY26, our revenue was rupees 65,799 crores. In reported currency, our revenue grew 3.7% QOQ and 2.4% YOY. In constant currency, our revenue grew 80 basis points sequentially. Our Q2 operating margin stood at 25.2%, reflecting a sequential improvement of 70 basis points. This is excluding one-time severance provided this quarter. We achieved good growth momentum across all verticals this quarter. Our disciplined execution helped us expand our margins while making strategic investments. We have prioritized wage hikes, building future-ready capabilities, and establishing new ecosystem partnerships. Currency helped us support margins by 80 basis points. Giving wage hike to our employees was our priority, and so we have rolled out our increments for 80% of our workforce. This increment, combined with additional quarterly variable allowances, impacted our margins by 70 basis points, offset by benefit of 40 basis points from rebalancing of pyramid and 20 basis points from operating efficiency. We continue to make CapEx investments in infrastructure. A few examples are, we inaugurated our innovation center in Singapore, expanding our AI research and innovation footprint to 13 hubs globally. This helps clients accelerate innovation by providing quicker access to advanced capabilities and TCS's expertise. A new AI-driven operations center in Mexico City. In Europe, we expanded our software-defined vehicle innovation capabilities with 3 new hubs. And lastly, recently we opened our flagship TCS Interactive Design Studio in New York City to help clients create iconic products, services, and experiences that are seamless and unified across digital ecosystems. It is also important to note that we are on a drive to expand our already vast pan-India footprint further in both Tier 1 and Tier 2 cities to the tune of about 50,000 seats in the next few years. Our net income margin was at 19.6% and our EPS grew 8.4% year on year. Our accounts receivable was at 75 days outstanding in dollar terms. and the net cash from operations was 1.5 billion, which is 110.1% of net income. Free cash flows were at $1.4 billion, and invested funds at the end of the period stood at $6.3 billion. Our industry-leading margins are a vindication of our belief that we have the strongest ability to absorb market fluctuations and competitive pressures. Secondly, growth, when achieved through value creation and innovation, will have a positive impact on margins over time. We continue to work towards getting back to our aspirational band of 26 to 28%. Our financial discipline is also evident in our strong balance sheet, robust cash flows, and consistent shareholder payouts. We are committed to maintaining a healthy financial position that enables us to invest in a bold vision and return value to shareholders. This financial strength positions us well in our journey to become the world's largest AI-led technology services company, to build AI-centric capabilities, invest in talent development and acquisition, strengthen our ecosystem partnerships, while investing in infrastructure like data centers and scaling AI platforms. Our capital allocation policy remains unchanged. We continue to prioritize the return of substantial free cash flows back to our shareholders. The board has recommended a second interim dividend of rupees 11 per share. Now I'll like to invite Aarti.
Thank you, Samir. Good evening to all of you. As called out by our CEO, we want to become the world's largest AI-led technology services company. Towards this goal, we have taken a number of steps. I'll share some perspectives on each one of them, starting with the internal AI transformation that's well underway within the company. We've been focused on internal transformation, which is now under the broad umbrella of what we call TCS to the power of AI. We are pursuing this across 3 tracks. The first one is building an AI-first culture. To make everyone in TCS to be AI-first, we have democratized access to AI learning by enabling various AI tools and environments for our employees to explore, experiment, learn, and embed AI in their work. The benefit of this is visible in our AI-ready talent. We now have close to 160,000 associates with higher order AI skills. Our leaders are walking the talk. Over 10,000 of our sales and delivery have gone through an immersive and hands-on AI dojo program that we have rolled out. I'm also happy to share that in our effort to make everyone an AI practitioner, we just established a global benchmark in our recently concluded global annual format of TCS to the Power AI Hackathon. We saw over 281,000 TCSers participating in this hackathon, submitting over 500,000 entries, which include both ideas as well as solution builds. As we shared this with our customers, we are hearing encouraging response in replicating similar culture change within their organization, and they are very keen to work with us to innovate with AI. The second initiative as part of the internal transformation is building AI-first solutions. As part of this, we are looking at our internal functions, finance, HR, legal, all our internal functions, and also our own IT operations, including how we support our systems as well as build systems. One such case in point in HR, we have been reimagining how we engagement with an AI-first approach, and we are also looking at rolling out a learning co-pilot for every associate. The third aspect of our internal transformation is how do we continue to scale these initiatives. We have set up a TCS to the Power AI office that addresses 3 critical foundations of our initiatives: scaled agentic AI architecture, responsible AI use, and platform and partner innovation and IP creation. These foundations are in place and are continuously evolving within the dynamic ecosystem around us. Now, let me talk about how we are scaling AI for our customers. The journey of making AI real and experiential for our customers cuts across industry value chains, enterprise platforms, and solutions. We see this journey starting with ideating, leading to building and scaling with AI. We are taking AI close to our customers with AI Innovation Days at customer locations, TCS spaceports, and our India delivery centers. We are leveraging rapid build as an approach to deliver business outcomes with AI in a matter of weeks. We are also helping our customers scale AI across their enterprises through AI labs, AI office, and AI platforms. We are also building agentic AI solutions for business value chains in each industry and enterprise functions across all our industry verticals. Moving on to the third pillar of our strategy, we are transforming every service line that we operate in and offer to our customers. We are reimagining each of these service lines with a human plus AI collaboration solution blueprint. This blueprint uses 5-scale AI autonomy model to define the interplay between our employees and the AI agents/systems. As we progress towards our North Star ambition for each of these service lines, we are defining the art of possible of what the future can look like for each of these service lines. Sudeep and Kriti will cover the remaining two pillars of our strategy later in this call. Now, I would like to provide a brief update on cybersecurity. As all of us know, global businesses are increasingly experiencing cyber threats. These threats are getting more and more sophisticated. We are working closely with our customers to safeguard their interests. Recent incidents saw some of our TCS clients becoming victims to these cyber attacks, resulting in disruptions to their businesses. I would like to clarify that there has been no compromise of TCS systems, nor any impact to other customers of TCS in these incidents. The investigations for these incidents are being managed by the customers respectively, and TCS is playing a significant role in supporting the customers in their recovery efforts. These efforts have been positively acknowledged by our customers. I would now like to invite Sudeep. Go ahead, Sudeep.
Thank you, Aarti. Good evening, all of you. In Q2, we announced a wage hike for over 80% of our workforce with effect from September 1st. Our quarterly variable allowance was higher than last quarter. Reflecting our commitment to reward employees for their contribution, TCS has always been first in announcing wage hike across cycles. The IT services industry is rapidly changing with new technologies like GenAI, shifts in operating models, and changing client expectations. This is a great opportunity for TCS to reposition itself and become future ready. As Kriti outlined, we have embarked on our journey to become the world's largest AI-led technology services company. Building a future-ready talent model is critical and core element of our approach. Towards this, we are making efforts across 4 fronts. First, creating personalized learning pathways using artificial intelligence for its employees. We are also working with the academia to introduce skills required for next-generation technology and human AI collaboration. Next is acquiring top talent from industry for cutting-edge skills and capabilities. The third one, hiring diverse skills locally across geographies. We have perfected this model in Latin America and a large local workforces in all key geographies, including the US, UK, and Europe, which we will continue to expand. And finally, we have released 1% of our workforce, mainly mid and senior level, with skill and capability mismatch. We are providing the impacted employees with benefits, counseling, and outplacement support for their transition, as well as severance at terms higher than industry standards. Additionally, there has been involuntary attrition as part of our regular ongoing efforts pertaining to performance and bench policies. With the new hires, we release an attrition voluntary and involuntary at a global workforce close for Q2 FY26 stands at 5,93,314. Finally, on H1B, we have significantly localized our workforce in the US. Approximately just about 500 associates have traveled to the US on H1B. We believe our business model will be able to adapt quickly to any changes in immigration policy. In Q2, we provided 1,135 crore towards severance. The severance package is much better than industry standards. We approach this whole exercise with empathy and care. We are on a journey to build a strong future for our clients and all other stakeholders. We'll continue to nurture our employees and recruit future relevant skills required for our growth across all markets. We'll continue to be a net job creator. Lastly, we continue to be benchmarked with the best employers globally for our workplace practices and policies. In Q2, we won more than 23 awards globally across various aspects of HR value chain, including our work towards gender equity. I will now like to invite Kritik.
Thank you, Sudeep. Earlier in the call, I had articulated the 5-pillar strategy to become the world's largest AI-led technology services company. Aarti spoke about our internal transformation, TCS for power of AI, and also how we are reimagining all our service lines and making AI real for our customers. Sudeep spoke about the future-ready talent model. Moving on to the 5th pillar of our strategy, we will be significantly expanding our participation in the AI ecosystem. Towards this, we have built strong partnerships with deep tech companies, hyperscalers, niche startups, amongst others. We are deepening our participation in the AI ecosystem by expanding into adjacencies. We are creating a world-class AI infrastructure for all stakeholders, including enterprises, hyperscalers, and sovereign requirements. Earlier this year, we announced the launch of TCS Sovereign Secure Cloud. We are seeing very good traction for the same in our client base in India. In partnership with IBM and Government of Andhra Pradesh, we are deploying India's largest quantum computer in the country's first Quantum Valley Tech Park. And we are also forging strategic partnership with key technology players. We have formed strong 360-degree partnership with all major technology players, including all the hyperscalers, generative AI players, cybersecurity product companies, the enterprise product companies, and specialist AI solution providers. Today, our board approved the creation of a TCS subsidiary that will focus on building a sovereign AI data center with a capacity of up to 1 gigawatt. We have stepped up our efforts in pursuing acquisitions to enhance our capabilities, including high-end services, intellectual property, and market presence. Towards this, we also announced just today acquisition of ListEngage, a leader in marketing tech and Salesforce. Our journey to becoming an AI-led organization is anchored in bold transformation from talent and infrastructure to customer value and ecosystem partnerships. With this objective, TCS is poised not only to lead the AI revolution but to shape a future where technology and human ingenuity together create lasting impact for all. We are confident that staying true to our values will lead us to sustainable long-term growth with superior profitability. I'll now open the line for questions.
Thank you very much. We will now begin the question and answer session. Participants who wish to ask a question may press star and 1 on their touchtone phone. If you're using a speakerphone, please pick up your handset while asking a question. This is required to ensure optimum audio quality on the call. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Yogesh Agarwal from HSBC Securities. Please go ahead.
Hi, thank you so much. So, Kritik, couple of questions. Firstly, the heightened investments in AI are very welcome change. My question was, can you provide a little more clarity on the capex required? Because 1 gigawatt seems to be a very, very big investment. I mean, global references are almost $20 billion of investment. So, what is the time period? What is the kind of capex? And you said it is sovereign. So, what does it mean in terms of the client? Would you be selling into your traditional clients or mostly in India? So, a little more clarity would be very helpful.
Yogesh, from a CapEx perspective, while we have set a target of 1 gigawatt, but we will be doing it in phases. We expect to achieve 1 gigawatt over a period of 5 to 7 years. And our calculation roughly is about every 150 megawatt would be about $1 billion. So it's not that we are going to put all the money in year one. And we also clarified that this would be a combination of equity and debt. And we'll also bring in finance partners for the equity. So maybe if we require more color, Samir can provide on that. The reason that we are saying sovereign cloud is it's going to be established in all centers in India. And it will be host all the data. We are expecting all the data and compute to be hosted in India and not leave the shores of India. That's the reason we are saying it's a sovereign data center. Just to provide some more information, our current objective is to provide all passive components. The client, whosoever is occupying, they will bring in their compute and storage.
Great. Thank you. Kriti,
and we will be hoping to sell this to the pure play AI providers, the deep tech companies, and the hyperscalers, and to to a great extent, the government needs in India and the Indian enterprises are the expected participants here.
Right. Okay. Thank you. Just secondly, on the growth, you said the demand environment hasn't changed and the macro uncertainties are the key reason. So the current, while the quarter has been a little bit of a beat, the current growth rates have not been impacted by deflation on STLC by AI. You think that's not a factor? It's all macro.
Yogesh, we have had a better growth compared to Q1. And as I said, macros have not changed much. But what our deep engagements with our clients and the AI solutions, the rapid builds that we take to our clients, all of us give us the confidence that we will be able to sustain the growth momentum or improve the growth momentum compared to H1. But otherwise, there is no major change in the demand environment.
Very well. Thank you.
Thank you. We'll take our next question from the line of Sudhir Guntupalli from Kotak Mahindra AMC. Please go ahead.
Yeah. Hi, Kriti. Thanks for the opportunity. And a follow-up to what Yogesh has asked. So on this AI data center move, currently do we have any tie-ups with any of the, let's say, large consortium players like a Stargate or any of the deep tech players, either for bringing in more equity investments or for being our tenants once this is set up in the steady state? And any broad indications on the revenue per megawatt you're looking at and the EBITDA margins and the IRRs you are expecting on this data center investment?
So, Sudhir, in terms of what one Kriti talked about finance partners, we are speaking to multiple partners and we'll finalize in terms of combination. It could be one or more coming in. Also in terms of customers, as he called out, it would be hyperscalers, India enterprises, government, and we look at in terms of overall partnership. In terms of matrix, too early to call out. We have just set up the subsidiary. It would be about 18 to 24 months when the first revenue starts kicking in. At the appropriate time, we'll start calling out the matrix as well.
Fair enough, sir. And just to understand the operating model right, did you say that we'll provide it on a cloud service provider basis or a co-location basis or just as on a managed services basis? So in response to
on a co-location basis.
Okay, it will be on a co-location basis. Okay, sir. Thank you and all the very best.
Thank you.
Thank you. Next question is from the line of Ankur Rudra from JP Morgan. Please go ahead.
Hi, thank you. I just wanted to understand on this AI transformation you're doing, what does it entail in terms of existing client engagements? Do you have a sense of potential productivity gains or any kind of change in scope from a deflation or inflation perspective on your existing services as you transform?
Ankur, see, this whole belief and confidence on becoming becoming the largest AI-led services company is based on the strength of the existing client relationships and the partnerships that we are building with all the players in this ecosystem. And we expect every project that we do will be AI-led. Okay, therefore, which means that there would be, we will be offering speed, we should be offering flexibility, and there could be productivity gains also in these projects. But we'll also be doing projects that could not have been done without AI in the past. So our expectation is overall scope of engagement or size of engagements would definitely increase, but there would be productivity benefits that the clients would get in the individual project, and we also will get some productivity benefit in doing these projects because we'll be leveraging AI.
Got it. Understood. I just want to clarify a couple of things. One, was there any headwind on the client this quarter which had a cybersecurity incident in terms of your revenues and margins? And also, second clarification was if the redundancy charge we took this time, given 1% was impacted, should we expect something similar in future quarters also?
No, first on the headwind, Ankur. Okay, the only headwind we impact is because of the nature of the outages they had. We could not start some of the projects that we were planning to start. That was the headwind. Otherwise, there was no other significant headwind because we were working very closely with the customer in helping them in recover the overall operations. The second question on the charges we had taken for the using redundancy. As we explained before, we would be continuing this exercise throughout the year. So at the same time, we are not chasing a particular number here, but we will continue to do this throughout the year. So whenever we are paying, if you are paying any redundancy charges, we'll take the charge appropriately in next 2 quarters. But I don't want to quantify I cannot quantify what would be the number at this time.
Appreciate it. Thank you, and best of luck.
Thank you. Next question is from the line of Ravi Menon from Macquarie. Please go ahead.
Hi, thank you. Congrats on a really broad-based growth. If I'm looking at the data center investment again, what really prompted this? This is very unlike, I'd say, our approach so far where we've been asset-light.
Yeah. So Ravi, we've been looking at opportunities to expand our play in the overall AI ecosystem. And if you look at, we've been working with many of them as solution providers, solution integrators, or leveraging the cloud. Now, in the past, if you look at, we also wanted to expand the footprint in India, leveraging the participation we have with all these partners. As you know, some time ago, and we also been in the private cloud to a limited extent in the past. And then we announced recently the Secure Sovereign Cloud for India requirement. We also announced our participation in the quantum program with Andhra Pradesh government. So in order to, we looked at this important adjacency that we should enter into. And with that in mind, and we also strengthened our partnership and relationship with the hyperscalers and the deep tech by doing this. So all this put together, we thought, and of course the most important thing is our calculation, the unmet demand that's going to be in the data center space. Like we believe currently, our calculation shows that we have only 1.2 gigawatt of capacity in the country. And the next 5 to 6 years, it can go up to, the demand can go up by almost 10 times. Whereas the capacity, at least committed capacity is only about 5 to 6 gigawatts. So that is going to leave so much of unmet demand. So all these things put together, we thought it's a good opportunity for us. And the most other point is it also guarantees a stable annuity revenue as well.
Thanks for the detailed explanation. The second question on the productivity improvements that you're seeing in AI. So if I understand correctly, the primary benefit of Gen AI is only in application development from scratch, right? And that's a relatively, small part of the overall market that we play in. because what we do is primarily IT outsourcing, which is application maintenance and infrastructure maintenance, things like that, right? So would that be right, that those activities, we already have level 1 support more or less automated? So to the existing book of business, how should we think about the impact of AI?
I think, Ravi, when you look at the existing book of business, right, when you look at our application support services or our infra services, right, they are increasingly becoming AI-led. When you look at how we deliver these services, there are significant opportunities to drive productivity benefits and also drive the quality of the service delivery with AI. So that's where the reimagination is happening, and the initial productivity savings are starting to be seen. And as we increase the level of autonomy, as we understand these technologies better, we should be looking at further productivity benefits. Then the second portfolio, which is significantly, again, aided by AI, is our, software engineering life cycle. Again, starting to see good benefits coming in, but then there is an evolution, right? You start with, single digits, 10 to 15% productivity. Then there's an evolution to reach, 20-25%, but that's a journey to achieve higher level of autonomy, and that's what we are driving. The third area where we are seeing significant, I would say, opportunity is around AI-powered modernization. As you would appreciate, many of our customers globally have a lot of technology debt that they have carried over the years. Gen AI and agentic AI are powerful tools to really address the tech debt, right? You can actually use these Gen AI to understand the legacy code and forward engineer and deliver the new code. So modernization with AI is a huge opportunity, and we are seeing significant uptake in across customers, but I would say right now significantly in BFSI, and we expect to replicate this across other verticals.
Thanks so much, Aditya. And if I recall right, you already announced a North American bank that's doing a complete mainframe modernization using AI, right?
Yes.
All right. Thank you. Best of luck.
Thank you.
Thank you.
We'll take our next question from the line of Gaurav Rateria from Morgan Stanley. Please go ahead.
Hi. Thank you for taking my question. My first question is around the investment in the new subsidiary on data center. Should we look at this investment as a standalone new business unit on providing co-location services, or should we think about having a very thick synergy with your existing portfolio of services, using this asset intensive business to build some services on top of it?
So one, the business itself, we'll be keeping it separate. It will have separate management bandwidth. We are in the process of putting in an entirely separate team outside of TCS for this, but it will have adjacencies with TCS. It's a natural extension in terms of what partnerships which we are looking at creating with hyperscalers, what services we want to provide to our customers, and this nicely fits in as an adjacent.
And if I may just add to what Samir said, Gaurav, if you look at the entire AI stack, right, starting from infrastructure as the starting layer, all the way up to the apps and the agentic apps at the topmost layer, right? This gives us the coverage across the AI technology stack.
Got it. My second question is on the interplay between humans and AI that you talked about. How is it going to change the delivery model and the billing models? Do you think that we'll incrementally move away from effort-based business model to outcome-based business models, and that is how the business should evolve, and there should be more non-linearity in the business going forward?
I would say, Gaurav, I think that is the direction in which the model is going to evolve. These are initial days. but we are starting to make commitments on outcome-based projects with select customers, and there are learnings, and this is a model that we see increasingly evolving and becoming more mainstream with customers.
Got it. My last question is that should we evaluate or should we consider this new adjacency as a completely different business with respect to the return ratio profile, given that right now we are very asset-light business and having a very different return ratio profile? Just trying to understand, how should we think about from a medium-term perspective about the company?
As we said, this is an investment which we will come. It would have partners coming in. From a profitability perspective, I don't think at an overall TCS level, it will not be margin dilutive. Return ratios also, given the overall size expected over the years, it should not have a significant impact. Our ROEs are currently over 50%, so we still expect it to be benchmarked.
Okay, thank you so much. This is very helpful.
Thank you.
Thank you.
Let's take our next question from the line of Surendra from Citi. Please go ahead.
Yeah. Good evening, everyone. Couple of questions. In your prepared remarks, you said that FY26 growth in international business will be better than FY25. So just wanted to clarify if this is in constant currency terms, USD terms, and could you also tell us what the comparable growth in FY25 was?
I don't have the FY25 number of H1 number immediately with me, but
it was about 70 basis points, and it is in constant currency terms.
Okay, so constant currency basis, 70 basis points, and this year will be better than 70 basis points. Understood. The second question is, with a rise of 1% workforce, the headcount declined by 20,000 people or 3%. And what you had announced earlier was 2%. So should we expect a similar kind of headcount reduction in the next quarter as well?
So almost, the 20,000 headcount is a factor of voluntary and involuntary attrition. So you should see that. But as we announced against the 2%, we have midway, so we have done approximately 1% of it. And like what Kruti just mentioned, we don't have a target. We're not chasing a target. We continue to evaluate everyone after all the investment in learning and development that we've done, where we find certain mid and senior level people are not able to find the right role based on their seniority. Those are the ones that we will release with a lot of care and providing all the required support.
So just to clarify, there will be no involuntary attrition beyond the 1% number. Is that understanding correct?
No, I didn't say that. See, we estimate it to be 2%. We are currently at 1%, and we will continue to evaluate people whom we can redeploy, whom we are not redeploy, and those are the people that we will release.
And just one last clarification. Sorry, go ahead.
No, did I answer your question?
Yeah, no, that's fine. Thank you. And just one last question, Kriti, Aarti. I think, in terms of the data center business, I think there are a lot of businesses which are synergistic to AI if we take such a broad view of things. So is there a clarity in terms of that, okay, what other areas we could possibly invest in?
We've been evaluating, Surendra, multiple opportunities. As I said, this one looked more attractive for us because of the demand commitment based on the discussion that we've been having with the potential buyers, the demand commitment we could get, the kind of revenue profile, the committed annuity revenue profile it has, and the potential unmet demand we'll have in India. Okay, all combined with this looked most attractive for us to start with. But we'll continue to explore. If there are other adjacencies that come up, we'll explore.
And Samir, just one clarification on ROE of this new business. What is the expected ROE versus your current ROE of 50% plus, as you highlighted earlier?
The ROE of this business, as you all have rightly identified, it's capital intensive, will be low. What I'm saying is overall TCS ROE will remain market benchmark.
Understood. Thank you.
Thank you. We'll take our next question from the line of Kumar Rakesh from BNP Paribas. Please go ahead.
Hi. Thank you for taking my question. My first question was a clarification. So the statement which you made that TCS intends to become world's largest AI-led technology services company. How are you defining that as the largest AI-led technology company? Which matrix you are targeting at?
Kumar, as I said, we based on the discussions that we've been having with customers, and based on the kind of CRT talked about, the internal training we did, hackathons we did, number of participation. So we believe that we multiple metrics, right? Be in terms of number of people participating, number of projects which we'll be doing, all combined together, we would definitely we will become, with aspire to become the largest. If you ask me one single metric today, I don't have it, to be honest. We will be evolving. How do we measure ourselves on a year-on-year growth and improve on this? And so that's the honest answer. But we are confident that we will be able to have the biggest impact that we will deliver in the industry because of leveraging AI.
Got it. Thanks for that. My second question was around margin. So we have seen sequential improvement now. The wage hike is behind you, and pyramid rationalization also would start kicking in. And going by your comment, your second half growth should be better than first half. So for the rest of the year, is it fair to expect the margin should continue to see an expansion?
So, Kumar, as you know, in H1, we have improved 100 basis points. We will continue our journey towards our aspirational band of getting closer to 26%. But the takes on it or the puts on it have been in terms of the implications which you called out. The wage hike was in Q2 for 1 month. It will be for the full quarter next quarter. Also, in terms of the investments which we have called out, would have an impact in terms of we have been investing, and this would have increased investment requirement. Irrespective of it, we would want to inch closer to 26%.
Great. Thanks a lot for that.
Thank you. Next question is from the line of Nitin Padmanabhan from Investec. Please go ahead.
Yeah, hi. Good evening. Thank you for the opportunity. Just a couple of questions. So one is, in the last quarter on the deal, we have had very good deals on a consistent basis. You had alluded to 3 points that were not leading to better revenue conversion. One of them being projects starting at a lower pace, and the other one being some projects being paused. How is that sort of evolving at the moment?
Nitin, at that point, we probably, as I was alluding to, it's in a much improved, it's an improved situation. The number of project deferrals or projects getting paused have reduced compared to the last quarter.
Sure. So incrementally, we should see better accretion. At least growth should be in the positive territory here on, and you have alluded to that.
That is our whole intent.
Correct. Any incremental update on, let's say, BFSI or consumer and Europe? I think last quarter you were a little tepid from a commentary on those three. So just wanted your thoughts there.
See, if you look at the momentum, growth momentum, right? All of them have improved. BFSI continues to grow globally. Particularly, BFSI North America has done well. And similarly, if you look at Europe has done well compared to last quarter. Correct, Samir? And then even if you take CBG, you mentioned the degrowth has been largely arrested. And so overall, we expect most of the industry segments to bend the curve, subject to seasonalities of Q3. But they'll be getting into growth momentum. Of course, the Q3 seasonalities would be in play.
Got it. And on the data center capex, maybe roughly based on what you said, it's maybe around $6.5 billion over a 7-year period. From a cadence perspective, how should we think about it? The early part of the 7 years versus the later part? And would all this capex be, you did mention partners, so would it be partially by partners and partially by us? Just a clarification on both.
So definitely it will be partially by partners, partially by us. And at this time, we told you it's about 5 to 7 years for the complete build out of 1 gigawatt. Currently, we expect it to be more uniform, but
uniform. Yes.
And if there is an increased demand, if we have to accelerate, we will definitely calibrate it at that time. But current planning is it will be phased out uniformly over the 6 years.
Got it. And just one last one, if I may. Any color on the kind of deals in terms of sizing? Are you seeing a return of smaller deals or discretionary? Any improvements there that you have seen during the quarter or directionally?
No significant improvement, but at the same time, when Aarti spoke, she was mentioning about number of rapid build projects that we are doing. And we do see such projects because they tend to be smaller in nature, smaller tenure, we tend to complete them within a quarter. So such projects are increasing in number. And we also find more modernization projects. Some of them tend to be shorter. See, while a large mainframe modernization would take a long time, some of the other modernizations can also be complete in a short time. So such projects are increasing. But overall, if you ask me, is the number of short-term projects or smaller projects increasing compared to larger projects? There is no significant change.
Perfect. Thank you so much, Kriti, and all the very best.
Thank you.
Thank you. Next question is from the line of Abhishek Kumar from JM Financial. Please go ahead.
Yeah, hi, good evening. 2 quick questions. About the cybersecurity instance. Just wanted to check if the issue has now been resolved and the projects you said which couldn't start, have they now started resuming? That's the first question.
So, Abhishek, to your question, yes, I think the recovery efforts have been completed, and all the sales and manufacturing systems are all up, and this happened just early this week. So I think we expect the projects to pick up in the coming weeks.
Great, that's good to hear. Second, near term, especially 3Q, any early indication of how furloughs are looking this year compared to previous years? Generally, we have seen that in a weak demand environment, furloughs tend to be longer. Any such signs at this stage?
At this time, we are planning, based on the inputs we have, it's likely to be similar to last year.
Okay, sure. Thank you and all the best.
Thank you. Next question is from the line of Vibhor Singhal from Nuvama Equities. Please go ahead.
Yeah, hi. Thanks for taking my question. So, if you just once again on the AI data center investment, given that you mentioned that it's going to be more like a sovereign data center, and given the GDPR regulations across the world, is it fair to say that this will have limited synergies with our existing clients, and most of the clients that we would be deploying using this data center would be more of India-based, and that is where we would be looking for any synergies, if at all, from our current business?
This is again, Vibhor, as we mentioned, it's a passive data center. The likely users could be the hyperscalers or deep tech who want to do the training inferencing in India, or Indian enterprises, they want to leverage it as a private cloud. So these are the kind which we are not expecting our overseas customers to be hosted specifically in India. It's more like what we are offering for these hyperscalers and India-based businesses or deep tech.
Got it. And you mentioned that we've basically gone ahead with this as for the demand commitments and the annuity commitments, and
different. So we've already, I would assume we would have already had conversations with.
I did not say demand commitment. I'm saying that there is a lot of unmet demand in the market that made us getting into this business.
So are there any MOUs that we would have signed or any early conversations that we have got into potential clients with? Or would that be explored?
We are having quite a few conversations with our customers to explore the demand, and we are quite positive about the prospects.
Got it. Just one last question from my side. In terms of the revenue this quarter, we saw a sharp jump in the sale of equipment and software licenses revenue. Almost more than half of the incremental revenue in this quarter came from that. Just a quarterly specific thing, or do you think that could be a trend going forward as well?
The sale of in fact, if you look at the equipment and software expenses, there's about 200 crores, 250 crores increase, and that's practically the increase. BSNL this quarter has remained flat.
Got it. So and we expect it to remain in the same range as it has been.
We have Q3 seasonality, which you would typically see. Other than that, we don't expect unless we get the BSNL PO later.
Got it. Thank you. Thank you so much for taking my questions, and wish you all the best.
Thank you. We'll take a next question from the line of Rishi Jhunjhunwala from IIFL. Please go ahead.
Yes, thanks for the opportunity. So just harping a little bit more on that AI investment, a couple of reasons that you provide were that the demand in this space is very high and provides a new stream of annuity revenues. But outside of that, does it put us in any kind of disadvantage versus our peers if we are not doing this investment, or does it put us at an advantage versus other peers on the global revenues that we earn here, if at all? If not, yes.
So go ahead, Rishi. Sorry, complete the question. Sorry.
Yeah, so I was saying that if that is not the case, then if you look at the overall technology spending landscape, then there would be a lot of pockets around software and solutions where those kind of investments probably would have been more synergistic to us.
Rishi, there are definitely a number of places where we can invest. We took this place because it creates a synergy with our existing. See, hyperscalers also happen to be our large clients as well, large GTM partners as well. And we also have deep relationships with all the AI native companies who could potentially be using it for their India requirement. So we believe that there will be a natural synergy that will be created. As I said, we want to play in this ecosystem strong.
Yeah.
And also it gives another group synergy as well. If you look at the Tata Group companies or in the power, real estate, project management business.
Tata Communication.
So there is a different kind of synergy we can build in here. But from a client perspective, we believe a strong collaboration can be derived out of this one.
And the Tata Group synergy, we see that as a very unique Tata advantage.
Understood. And second question is, I think in the opening remarks you hinted that while you have done this one acquisition, seems to be some focus around trying to do more acquisitions as well. I guess this is something you've done after almost 10 years. So is there should we assume that our acquisition intensity may also potentially go up in the coming years, and how does that change our capital payout policy, if at all?
Definitely, if I answer the first question is yes. We are very actively looking at more opportunities for acquisitions. And capital payout policy, we will see now at this time the stated policy continues to be to return 80 to 100%
of substantial free cash flows, and that is after all investments.
So, but if we end up making a huge acquisition that impacts our ability to do a cash flow, we will be upfront about it.
Understood. All right. Thank you, sir.
Thank you. Ladies and gentlemen, we'll take that as the last question for today. I now hand the conference over to management for closing comments. Over to you.
Thank you, operator. In Q2 FY26, Our revenue grew 0.8% sequentially in constant currency, with an operating margin of 25.2% and a net margin of 19.6%. We saw good growth momentum across most verticals, service lines, and geographies this quarter. International business fueled growth, along with India and emerging markets performing well, despite BSNL engagement ending in Q1. Our TCV was robust at $10 billion in Q2, which grew 16% year-on-year, including a mega deal win using AI-enabled differentiated solutions. We reiterate our outlook for FY26 international revenue growth being better than last year. TCS will continue to be a key jobs provider in the industry. We want to become the world's largest AI-led technology services company, enabling business, government, and society. With that, we wrap up the call today. Thank you all for joining us, and wish you and your families a very happy festive season ahead. Thank you.
Thank you, members of the management. On behalf of TCS, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.